on the markets. Let's dive in more on this. Michelle Schneider, who is the partner and director of trading research and education for MarketGauge.com. She joins us now. Michelle, great to have you back here with us on the day. All right, you got to give us some of that expert analysis that you always bring. Markets opening much lower to kick off the week after 2 straight weeks of losses. So what's driving this sentiment?
Well, there's been signs of fracture in the market for the last several weeks. If you don't look at NASDAQ, take away new tech, and you just look at what really represents the actual economy. So that's been looking at retail and transportation and small caps. Small caps has gone sideways. Retail was starting to falter. The retail sales gave it a little bit of a boost, but still nothing compared to what we saw in those other indexes in terms of the tech. And transportation in particular has shown a lot of weakness, and I like to focus there because what that really represents is demand. You want to see, obviously the variant has a factor because of airlines and travel, but even just trucking in general, and I know we have some big earnings this week, FedEx being one, but some of those companies have not been doing well. So this has shown that there's going to be an economic slowdown regardless of all the catalyst news that happened, obviously China being the big catalyst to get people a little bit nervous and start dumping shares ahead of today's open.
Okay, and so break that down a little bit further for us, because we've been tracking the interesting activity that is a much larger issue, especially within that region in China and Evergrande. We were discussing this with one of our other guests this morning. I would love to get your take on how much that activity is actually permeating into the U.S. or more broadly around the world.
Well, I think what makes it such an interesting situation is that we've had already President Xi showing that he is looking to take control by breaking down some of the big tech, those monopolies. And then this situation happens just as his lifelong plan is to eradicate poverty in China completely. So what this shows is that even though it's a state-run capitalist society, there are fractures there as well where they get highly leveraged, and as you can see that they were defaulting on the bonds, this particular company, Evergrande, in real estate, where a lot of people have invested in China. They were expecting to buy into this to get apartments and housing. So what, if you step back from the facts, obviously psychologically, it jars the belief that she's got it all going on because we can see now that there are some problems. The question is going to be, A, what is the catalyst in terms of other real estate companies and internationally, whether or not that just sends a blow that everything really under the surface is fragile when you have everything up based on liquidity and debt that has been artificially provided. And number two is, what are they going to do about it? Are they going to actually do sort of a bailout type of program like we saw here in 2008? So I think it was just really basically more of a straw for the U.S. markets and possibly a buy opportunity, but we have other things emerging here that also are worrisome over the next couple of weeks, which we can talk about.
Certainly. Okay, and so as we move forward throughout this week, let's start here first. Of course, the Fed is going to be in focus. What do you expect the Fed to signal as they enter into their September meeting?
I've never really thought that they would do anything but stay accommodative. It's up to Jerome Powell, and he has a legacy that he wants to maintain. He certainly doesn't want to go out, if he's not renominated next year, as the guy who cracked the market after the big run. So I think they're going to maintain a dovish stance. Unfortunately, something that he couldn't control is how much confidence are we going to have in the Fed, considering we found out last week that a lot of the Fed presidents have been trading. And we don't know, it's not illegal to trade as long as it's within a certain time frame before they set monetary policy. But if that turns out where they're finding out that, let's say, they became before their bond buying program, they were all buying bonds or stocks like we're finding out now, and the time was illegal, I don't necessarily think anything will happen to them, but I do think that it's sort of on a Fed-driven market raises some eyebrows in terms of how strong this market really is, and the economy.
Certainly, especially when the market's watching for what the Fed's appetite may be to stop some of their bond purchases, or, additionally some of the tapering that we've been discussing and acceleratingly so over the past couple days and weeks. With all of that in mind, we still do have a couple of the companies that are going to be reporting earnings this week. And as you started to talk about retail, one of those came to mind in how much they have been delivering on the e-commerce side of retail in FedEx. We're also going to get the retail giant that is Costco, and then also annexed to retail, of course, is Nike. And so what are you expecting as we're going into some of those earnings reports for this most recent quarter, and even for, future forecasts as we inch closer towards what is the all-important holiday season, seemingly within a stone's throw from here?
Well, as far as the retail earnings, I think you can look at the stocks and see that they have been declining ahead of the earnings, which is exactly the opposite of what we saw the last few quarters, where the stocks were rising in anticipation of good earnings. So I think the market is pricing in somewhat of a disappointment. And whether or not that turns around as we get into the holiday season, a lot's going to depend on what happens, I think, with not only the variant, but something else we really have to talk about here, and that's the debt ceiling situation that we've got coming up. So people who haven't been around as long as I have know that in 2011, when the government decided not to raise the debt ceiling, the market crashed 30%, like in a couple of days. And then, of course, what happened was they decided to raise the debt ceiling. So that raises a whole other issue here, because that could lead to a downgrade, which is what happened in 2011. So everyone will get spooked in that type of situation. But if we go back specifically, people are buying less. There is definitely a trend here to start buying cooperatively, particularly among the younger generations. I think people right now are nervous about, there's always going to be the people who are buying luxury goods, and that's a whole separate market. But in terms of people itself, there's not a lot of optimism in the country, and I think this is what worries me the most. People have gone from, yeah, we're going to come back strong, to the variant, and everything's going to go back to normal, to like, right now there's so much government corruption, come back, indecision, even with what's going on with vaccines, who do you believe, that I'm not so sure this retail sales will be so strong as we're going into this holiday season.
All right, Michelle Schneider, every one of our conversations, I always wish we have more time. We'll have to have you back on, as always. Michelle Schneider, who's the partner and director of trading research and education for MarketGauge.com, joining us here this morning. Thanks so much once again for the time. And let's get our viewers caught up.